Hi there. In this video, we explain the VAT threshold updates from the Spring Statement 2026 and what they mean for UK small businesses.
So, the 2026 Spring Statement talked a lot about stability. But let's be honest, for a growing UK business, there's one tax that can make things feel anything but stable, and that's VAT. Get it wrong and you could be looking at a seriously damaging bill. So in this explainer, we're going to break down exactly what you need to know about value-added tax so you can protect your profits and plan your growth with confidence. Right, let's start with a number that should really grab your attention. £8,333. That is the potential VAT bill you could face on just £50,000 worth of sales, just for registering late. It's a massive, costly, and honestly, a completely avoidable mistake. Getting your head around these rules isn't just about ticking a box for HMRC. It's about protecting every single pound you work so hard to earn. Now, to help us navigate this, well, let's face it, pretty complex topic, we're using the expert insights from the specialists over at My Tax Accountant. Our goal here is simple: to turn all that government speak from the Spring Statement into a clear, actionable guide that you can actually use, so you can plan for growth without any of those nasty financial surprises. Okay, so here's our game plan. First up, we're going to uncover a hidden tax trap that catches so many businesses out. Then we'll get right to it and tackle the £90,000 cliff edge and what that really means for your pricing. After that, we'll navigate the maze of rules, look at some really smart strategies for your growth, and then finally, we'll pull it all together to build an action plan you can start using today. So let's start with that hidden trap, shall we? And to make this feel really practical, we're going to look at it through the eyes of a freelance designer. I have a feeling her story is going to sound very familiar to a lot of you. So let's meet Chloe. She's a freelance graphic designer, and her business is absolutely flying. She is brilliant at what she does. Her client list is getting longer by the day, and her turnover is climbing fast. But, and it's a big but, with that amazing success comes a brand new challenge, one that's tied directly to a critical tax milestone she's approaching way faster than she thought. And that brings us to a concept you really need to understand: fiscal drag. Okay, what does that actually mean? Well, even though the VAT threshold itself hasn't changed, inflation means your prices are probably higher than they were a couple of years ago. So you're hitting that fixed threshold much quicker, not because you're necessarily selling loads more, but just because the value of everything has gone up. It's like a silent tax increase that's pulling businesses, just like Chloe's, into the VAT system way sooner than they expect. So this fiscal drag is what's pushing businesses like Chloe's directly towards the biggest challenge we need to talk about: the £90,000 cliff edge. Let's break down what that really means and why it's such a massive strategic hurdle to get over. This is the question Chloe, and honestly thousands of other entrepreneurs, are asking themselves. What do you do when the very success you have worked so hard for literally pushes you towards a financial cliff edge? It's a genuine dilemma, and it forces some really tough decisions. So, the crucial number to remember is this one: £90,000. After the Spring Statement, the government confirmed it. The mandatory VAT registration threshold is staying at £90,000 of taxable turnover for the 2026-27 tax year. That is the line in the sand. The second Chloe's turnover crosses that £90,000 mark, she faces a really tough choice. Does she whack 20% VAT on top of her prices and risk losing her price-sensitive clients to competitors who aren't VAT registered? Or does she absorb that cost herself, which means slashing her profit margin on every single project she does? It's a proper catch-22. And here is the trap. This is the bit that catches so many people out. It is not about your turnover in a tax year. It's a rolling 12-month test. At the end of every single month, you have to look back over the last 12 months. The moment that total figure tips over £90,000, a 30-day clock starts ticking for you to get registered with HMRC. And as if that rolling test wasn't complicated enough, it's really just the start. It's all part of a wider VAT maze, where that official $90,000 number is surrounded by conflicting forecasts, and made even more complex by new digital rules. You see, this uncertainty makes planning a real headache. The official line is £90,000, sure, but then some budget reports hint it might go up to £95,000. At the same time, other policy wonks are speculating it could drop to as low as $60,000 or $70,000 in the future. With all this chatter, just reacting when it happens is not good enough. You have to be proactive.
And this is exactly where expert advice, like the kind from my tax accountant, is just invaluable. Their tip is simple but so important. When things are uncertain, the only real strategy is to plan for more than one outcome. You've got to know your numbers inside and out, your margins, your cash flow, all of it, so you understand your options before you're backed into a corner and forced to make a rush decision. Okay, here are a few critical details that often get missed. First, did you know that if you go over the threshold but you can prove to HMRC that it was just a temporary spike in sales, you might be able to get an exception? Second, and this one is huge, even if you sell things that are zero rated for VAT, like children's clothes or books, that turnover still counts towards the $90,000 limit. And finally, there's a forward look test. If you land one massive contract and you know it will take you over $90,000 in the next 30 days alone, you must register immediately. And on top of everything else, there's another layer of compliance that is absolutely non-negotiable. Since April 2022, every VAT-registered business, no matter what its turnover is, has to use Making Tax Digital. That means keeping all your records digitally and filing your returns using HMRC-approved software. Paper records are just not an option anymore. Okay, so with all these rules and uncertainties, what can you actually do? This isn't just about avoiding penalties. It's about making smart, strategic choices for your business's growth. So let's explore the real options you have as you start getting close to that £90,000 threshold. Fundamentally, you've got two main paths to choose from. One option is to register for VAT voluntarily, even before you have to. The big plus there is you can start reclaiming the VAT on your business expenses, like software or new equipment. The downside, of course, is the extra admin. The other path is to actively manage your business to stay below the threshold. The pro there is simplicity, but the con is you can't reclaim any VAT and you might find you're artificially holding your own business back. So let's get really practical. What could Chloe do? Well, first, she can actively manage her growth. Maybe that means taking on fewer projects towards the end of a 12-month period to keep her turnover just under £90,000. Second, she could look at restructuring, maybe spinning off part of her business into a whole separate company, though that needs some serious professional advice. Or third, she could just register voluntarily. And honestly, this is often the best choice if most of her clients are also VAT registered, because they can just reclaim the VAT she charges them anyway. Right, so how do we pull all of this together into something you can actually use? Let's quickly recap the main takeaways and then outline the exact steps you should be thinking about for your own business right now. And while we're talking about compliance, it's not just about VAT. Here are a few other key dates from the spring statement to get in your diary. Don't forget the National Living Wage update on April 1st. And for those with higher incomes, the new Making Tax Digital rules for income tax kick in on April 6th, which happens to be the same day the dividend tax rates are set to increase. It's all part of the same picture. So I want to leave you with one crucial question to think about. After everything we've talked about today, the cliff edge, the rolling cast, the strategic choices, is your business plan truly that ready? Have you factored this into your financial forecasts? And is your pricing strategy strong enough to handle that transition when it comes? And of course, just a quick and important reminder, this explainer is for general guidance. It is not professional tax advice. Every single business is different, so it is absolutely essential that you speak with a qualified advisor about your own specific circumstances. And if you're looking for that kind of expert, personalized guidance, the contact details for my tax accountant are on your screen right now. Remember, being proactive is the absolute key to navigating business growth successfully. Thank you so much for joining me, and don't forget to subscribe for more essential business guides just like this one.